Hey guys, this is HTrade and I am a partner trader of Wesley Trades HQ. So basically, let me just quick back to, so we are basically back from the festive season, and yesterday was the 26th of December and I started trading again, right? Because why? The market started moving again. So CME markets was in some kind of a, could say some kind of a vacation on the 25th was a physical US public holiday, right? So basically you can't trade. I mean, the market's closed. 26th, the market started moving, and at the end of the day, some people say, no, you shouldn't trade during the festive season, etc., etc. Some people say that, right? No problems, right? So you do you. You don't have to trade during the festive season. No problems. All right. So at the end of the day, the market is open. And what is the market going to do? It is going to follow structure. As normal, so nothing's changed. It's going to do exactly as it is. It's going to do exactly what it wants to do. Still, to do what it wants. And it's going to follow its path, whatever it wants to do. It's still gonna do that. So all you have to do is you just need to keep on following your own strategy. That's it. That's all you have to do. And I would like to begin by showing you what happened yesterday. So basically, long story short, my account is in a bit of a drawdown, 100%. It's in a drawdown. And we're basically trying to revive the account as best as we possibly can. So on the 23rd, that was the last time that we traded, the account ended up at a loss here, right? So basically loss of 500 and something dollars. Got the account dangerously low to its maximum drawdown, and we're currently in 300, well, before I started trading on the 26th yesterday, it was in drawdown 376 left of the drawdown, because remember, this is a prop firm account, and its rules is it's a trailing drawdown. What does that mean? So I traded the account up to 51,500. So what is the trailing drawdown? If you trade an account up to 1,500 in the positive, right? What does that mean? It basically moves the drawdown counter up with 1,500 as well. That means that the new drawdown begins at 51,500, right? So if you minus 2,000 on that, what is the new maximum drawdown that you can reach? Around 49,500, right? Oh, well, 400 or whatever. So I think the maximum amount that I reached was 51,300 and something, right? Any case, long story short, we are in drawdown. That's full stop, right? So then I started trading again, and I thought to myself, okay, cool. Let's take this amount. I'm gonna trade 150. Let's divide it up into two trades, at least two trades, right? So $150 risk per trade, right? To try to revive the account. And that's exactly what I did. So here comes London session. I'm gonna quickly do a playback, yeah, because I want to show you guys this, right? Let's do this. I'm gonna play replay tool. There we go. Right, cool. So here we are on the 20. This is the Asian session, the 26th. Here we go. beginning of the 26th. And I was here when this move happened. So basically, let's go back to structure quickly. Let's take a look at daily. What are we doing on the daily time frame right now? You see all these liquidity areas here, and here has been taken out by this move on Wednesday. And now we are tapping a daily bearish fair value gap. So what the most logical thing for me when it comes to fair value gaps, especially higher time frame fair value gaps like this one, it usually has a bigger reaction from them. Now that's my rules, right? So anyone can trade however they like. This is my rules, right? And that's exactly what price did. It had its reaction and we sold off during the Asian time frame. We took out the previous day's London, the previous trading day's New York high, which was on the 24th. And we started selling off. We basically tapped that daily fair value gap and we started selling off. Beautiful, right? Okay, cool. So what now? Now price went down and it started tapping another higher time frame confluence, which is the 4-hour fair value gap below. So let's go to the 4-hour time frame here on the right hand side. And here it is. Beautiful. Sitting there looking beautiful, right? So price started selling off. We started tapping this fair value gap. And we started having a reaction from it. But now let's go to the 15-minute time frame, because now the 15-minute time frame also needs to align before I start looking for any trades, right? So the 1-minute time frame can do what it wants. We only use 1 minute for entries, not direction. Entries, 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 always. All right, cool. So here's the 15-minute time frame. Right, it looks like it's moving on the 1 minute. That's perfectly fine. So there's a 15-minute time frame. Here comes a London session. We take out immediately. We take out the Asian session low. We tap this 4-hour fair value gap. We took out liquidity here. And there's our first 15-minute bearish fair value gap. Right, so what are we waiting for? We're waiting for a reversal. So either you can use that bearish fair value gap as a sell method, or you can use it as a buy method. How can you use it as a buy method? You wait for price to break and close above it with another 15-minute candle. And now it becomes a bullish confluence, which it did perfectly. Now we have our 15-minute fair value gap. Not only that, we still need to wait because it's not set in stone yet. All right, we waited for 15-minute candle to close. Boom, there we have it. All right, now we have our bullish inverted fair value gap and we have our bullish fair value gap. It's a bullish inverted fair value gap because it's a sell fair value gap where we have closed above it. It's basically disrespecting this fair value gap completely, closed above it. 15-minute time frame turned bullish. And what did I wait for? I waited for the following: a fib retrace. That's all. At least a 50% retracement. That's all that I waited for. And then, of course, the 1-minute time frame also started turning bullish here on the right hand side. Let me just move this over here. Now you see the 1-minute time frame also started turning bullish. Beautiful, right? So bearish fair value gaps. And now we started disrespecting those bearish fair value gaps by closing. See, there's the bearish fair value gap. And what did we do? We closed above it and it turned it into an inverted fair value gap. Beautiful. So what are we waiting for? Just a fib retracement. You see this red line here. So that's all that I waited for. And did we get it? No, we didn't. And this trade left without me. As you can see, it went beautifully in that direction. I was so pissed because I was sitting here when this happened. I literally watched as this whole move happened. I was here. I drawn my fib tool here. I waited for price to tap the 50%. It very nearly tapped the 50%. That's why I always draw up the 45% here as well. But the one thing that it did not do is, did it tap this inverted fair value gap? No, it did not. That's what I was waiting for actually. So even if it tapped above the 50% level into this 15-minute fair value gap, I would have accepted it because the 15-minute time frame completely turned bullish here. The moment that we created this 15-minute inverted fair value gap, we had a nice retracement. We didn't tap it, but price reacted. Like I said, guys, this is we are still in the festive season. We are still in the festive season. And what is this? This is pure structure. This is pure structure moving at its own pace, right? So what targets do we have for this trade? We have the previous daily high, which we have already taken during the Asian time frame. It's still a good target for this, just this move up. Beautiful target. You could have just taken your take profit here. Just there. That's it. So then I waited for another entry, right? I waited for another entry. Now, what entry can we now make use of? Very simply, a continuation move. So what are we waiting for? We are waiting for simply a retracement into a new or this inverted fair value gap here. So a new bullish fair value gap or this inverted fair value gap here. So you have to just adjust your fib tool. That's all you have to do. You don't even have to use this fib tool anymore because this was only for the reversal move that we had to make use of the fib tool, right? But let's just and remember the fib tool is also a very good. It's still, even though we just used it here for this move, it's still a good confluence to use for the next move. So I waited. Cool. Our 15-minute fair value gap got created. And then I waited. There's another fair value gap that got created. And you see what I mean by we already started going up from this move here, right? So what are we waiting for? We're waiting for a buy continuation move. Now let me just quickly see here, because we tapped this fair value gap. But I still did not make use of that move. I was waiting for a fib retracement. And then I waited. And then I waited. And I waited. And eventually, boom, we got it. How beautiful is that? We tapped the 50%. So we started closing below that fair value gap there. But remember, if there are two fair value gaps after each other, this is a 4-candle fair value gap formation. Candle number 1, number 2, number 3, number 4. You see, there's 2 fair value gaps in this location. So price can still, even if it closed below this fair value gap, it may still respect this fair value gap, this first one in this formation, which we are doing right now. And boom, we got our retracement. That was more than enough signal for me to now start looking for a buy. So here we have our 15-minute fair value gap. Now we're starting to look for a buy. So what are we waiting for? Now you can go down to your 1-minute time frame. Now you know, okay, cool. The 15-minute time frame is on track. We're still bullish on it. We had our FIB retracement. Oh, check number 2. So what now? What are we waiting for right now? We are waiting for the 1 minute time frame to turn bullish and to give us an entry. So there's our new bullish fair value gap. Have we touched it? Yes, we did, but not really in 50%. And we waited. And boom. You can actually take your entry from here. There we go. You see that? You could have taken your first entry here because technically, if I do the replay tool again, what happened here? We have an inverted fair value gap. We tapped it literally in the middle. You see? In the middle. And it had a positive reaction. It had a bullish reaction of it. So you could have entered here. All right. And then you take your stop loss to here. And your take profit to 1 to 1.5. Or 1 to 2. So basically, which targets or what targets can we make use of? So this would be a target number 1. So after this, you can move your stop loss to break even, which I actually did. But let's just move on to see where I actually did. So I waited. So I could have entered here, but I was a little bit too late with that move. So what I actually did was I entered here. Okay. Why did I? No, it was from here. Sorry, it was from here that I entered. I did enter it. I did enter from here. Sorry. I did enter from here. This is the same trade, same. It's literally the same trade. It's the same trade. I just entered it a little bit late. Any case. So now we just wait for price to do its thing. Okay, when price got here, I moved my stop loss to break even, or above break even. I can't do it with this tool, but let me just quickly check. I think I got out here. When price reached this level, I got out. Price was playing around here at the previous daily high level, which is still a good confluence, and boom, I exited my trade here. There we go. That's where I exited my trade. And I was very happy with my profit level. And I posted it in my journal. Yeah, there we go. See that? Boom. I literally took my take profit after we've arranged when we got to that level, 25,903. 25,903? 903. This level, sorry. In any case, when price reached this level and it started to retrace, then I closed my trade. So that's why I'm thinking I closed it somewhere here. So I closed it at 1 to 1.5. And yeah, I just closed it. And I had a beautiful take profit there. Let me just quickly see the beginning of the move. See, there's the beginning of the move. How beautiful is that? Beautiful, beautiful, beautiful. In any case, that was the move. Sorry, this is a very long explanation for what happened here. But yeah, it's beautiful. So, and then I just waited until we get to closer to New York. So this is now pre-New York, actually. 9:15 and 9:30. So what are we waiting for now? We are waiting for the 15-minute time frame to give us some form of an idea on what it wants to do. Now, with this move that I took the trade from, it took out the Asian high, number 1, and it started tapping back into this daily fair value gap, this bearish fair value gap. So My best guess is that we're going to have a reaction from this move here, because we are taking the liquidity from the Asian level high, Asian session high, which we actually did. But let's just move on. Okay, 9:30 comes. What happens during 9:30? We started selling. But now keep in mind, we're waiting for 9:45 to see what does this first 15 minutes do, because that's going to give us our direction for the 1 minute, especially since we have taken out this Asian high and tapped into this bearish daily fair value gap above us. So let's just keep an eye on. And then suddenly price started going up. And what did price do? It took out the London session high and tapped back into this daily fair value gap again. And there are some people that actually bought from this move here, which was insane. Because yes, you could, because currently the 15-minute time frame is still bullish, and you could have taken your profit here actually. Boom, you could have taken your profit there easily, right? But that's not me. That's not how I trade. I actually could have taken this trade, but if I remember, I wait for candle closes. So yes, did we tap into CE of this fair value gap and this inverted fair value gap? Yes, we did. But take a look at your risk to reward. Where are you going to place your stop loss? Yeah, yeah. What's your take profit gonna be like? This. Not even a one-to-one risk to reward. So that's why I wasn't interested in taking a buy here. I wasn't. I just waited. So now the first 15-minute candle closed as bullish. Beautiful. But the higher time frame, we are tapping the higher time frame. Yeah. So I thought to myself, okay, cool. I would be willing to look for a buy trade 100%, but it must meet all my requirements. Cool. And then I waited. Okay, and then we got an inverted fair value gap and we closed below it. Boom. So that's the first bearish sign. We printed another bearish fair value gap. We printed another bearish fair value gap. And I just started tracing the fair value gaps to see what price is going to do. Price started tapping into this very small 15-minute fair value gap. And then what happened next? We tapped this bearish fair value gap completely through that. So that doesn't part of my entry model. But so here on, the 15-minute time frame was still bullish. But here we're very close to closing this 15-minute candle. Literally 4 minutes left. And if it closed below this level, I thought to myself, this means that the 15-minute time frame is going to turn bearish. And I made use of that idea and I took a sell trade there. We got a tap of CE of this fair value gap and we sold off. And I took my profits here once the London low has been taken. So that was my first New York trade. That was absolutely beautiful. There we go. You see, there's my trade. I took my stop loss here above that turning point. There we go. And I took my profit here. That's it. And I was very happy with my results. And then I went on to look, see if we can get another trade, because the 15-minute time frame is still bearish. And we have plenty of setups that we can look for. But so we're still here at the London session low. But what are we also tapping? Remember, we are still tapping a higher time frame confluence, which is the 4-hour fair value gap, right? So we might actually get a buy from here as well. Possibly, even though the 15-minute is completely bearish, we still might get a buy from here. Any case, so I just traced all the fair value gaps. Bullish fair value gap, didn't tap in, just went up. We tapped this fair value gap. You could have bought here, but what is the problem? The 15-minute time frame is still what? Bearish. After this close of this candle and this close of this candle, we closed below this 15-minute turning point here. This 15-minute turning point here. We're bearish. That's why I was not interested in any buys whatsoever. What I actually did was I drawn my fib tool from the previous high to the previous low of this New York session. And wouldn't you know, we started reacting from those levels. You see what happened there? Now we have a bearish confluence here. All right, cool. So we went up, no problems. What did we tap? 61.8% level. And what do I always tell you guys? Why is the fib tool so important to make use of? Because bigger companies and institutions out there make use of the Fibonacci tool. Why? A very simple reason. They want to sell from premium and buy from discount. So what are the big companies using? What are the big companies doing now? They are selling from premium. Take a look at this. We tapped the previous. You see, we are inside the previous daily high. That's why I'm keeping this level here, because to remind myself that we have already taken out the previous daily high. And the 15-minute time frame is bearish. We tap this daily bearish fair value gap. It's all bearish confluences. We are in an area of premium liquidity, premium sell liquidity levels. So what do we wait for? We just wait for our sell confluence. We just have patience. We wait. And we wait. We still have a 4-hour fair value gap here that we can make use of for a sell confluence. Take a look here. What's the 15-minute time frame doing? It's starting to go up, but is it bullish at this point in time? No, it's not. It's still bearish. Do we have any 15-minute bullish fair value gaps here? No, we don't. What do we have? We have an inverted fair value gap here, which is a bearish confluence. We have another inverted fair value gap here, which is a bearish confluence. We have another inverted fair value gap here, which is a bearish confluence. You understand what I'm saying? So that's why I was not interested in any buys whatsoever. And price was still busy following the route of this fair value gap. Okay, let me just quickly put back what I deleted. There we go. There's reason for that. Show you in a moment. So now let's move forward. So remember, I'm only using 1 minute time frame for entries. That's all. I'm looking for a sell entry. Am I taking a buy entry as I see 1 minute is currently bullish? No, I'm not. Could I have taken a buy here? I guess, because that's a good CE tap there. You see, it's literally the middle of this bullish fair value gap. You could have taken a buy there if you like. But where's your take profit? Where's your stop loss? Yeah. What's your take profit? I guess you can use that as your take profit, which is a good area. Very nicely done. You could have taken a buy 100%. You could have even taken a buy from here as well. Right? But the thing is, yes, you could have taken a buy, but what does the higher time frame confluence and the 15-minute time frame telling you? We are currently bearish. So that's why I was very patient. Price is still tapping the 61.8% level here. We are still inside this. We actually tapped the 75% level. And immediately, boom. What do we have here? This is a bullish fair value gap that turned into a bearish confluence after we closed below it. This is another bearish confluence, a bearish fair value gap that got printed after there. This is actually an entry model called BPR. BPR is an entry model where you make use of the momentum of the move as the entry. You don't even have to retest the fair value gap. So there's a bullish fair value gap. It got created. We reacted from it. We closed below it. And in that area where the bullish fair value gap is, we created a new bearish fair value gap as well. Not only that, I went to the 500 time frame. I saw there was an inverted fair value gap. There was also a bearish confluence. So we could have prematurely went into a sell trade here. And we could have taken profit, I think there. There we go. That turning point there. Could have taken profit there. That's the trade that I missed. I missed this completely. Boom. Straight back into the 4-hour fair value gap. And what now? This is a higher time frame confluence once again. So we have a reaction from that. We start going up again. Right? So beautiful. That was a beautiful move that we could have caught there. But I did not trade that move because I was looking for something else. Now, what am I waiting for? I am waiting for a CE entry like we had here. A tap of an inverted fair value gap in the middle of it and a printing of a candle in the direction of the trade. That's what I'm waiting for. I'm going to slowly incorporate this entry model into my strategy, but for the time being, I'm still using the CE the CE entry model. So what I did here was, all right, cool. I was looking for an entry model, and then I draw another fib tool here to see, okay, cool. I don't want to sell from any of these fair value gaps here. I'm waiting for my inverted fair value gap. I always wait for my inverted fair value gap first. Okay, there's a bullish fair value gap. Great. Now it's an inverted fair value gap. Not only did we close below it, we tapped very close to the middle of that inverted fair value gap. We closed below it with a bearish candle. And we actually tapped it again, by the way. Here we go. I took my stop loss here because that was a bigger turning point there. I could have taken my stop loss here, but my actual stop loss was around here. It's a 1.5 risk to reward trade. And I was in the trade. And then I just waited. And boom, we took our profit. Easy as that. Let me show you that. Here it is. Here it is. There we go. Cool. Beautiful. Went into the trade. As you can see, there's my entry. I actually went out here. Sorry, not completely here. I went out here. Closed my trade. Took my profit. And this account is busy reviving itself. Well, I'm busy reviving it. But yeah. So I'm trying to revive this account out of the grave because I'm very far into drawdown because I broke my rules too many times, to be honest with you. But not only that, during the London sessions, I noticed that my entry model that I use for New York time frame is not 100% viable for London session because the volume in the London session is not as big as it is during the New York session. So that's why I had to change my entry model for the 15 for the London session rather to a 15 minutes entry model. What do I mean by that? I wait for a 15-minute candle close after a fair value gap was tapped. So in this case, what I did here is I waited for this 15-minute candle to close. And once that 15-minute candle closed, it started going down. And that's why my entry was here, right? So I just waited for the 15-minute candle to react from this fair value gap and closed bullish. And then I was in for the trade. Now I could have entered from here as well, but because this candle closed inside this fair value gap, you see, it's still closing inside the fair value gap. That's why I did not enter. Then I just, for safety, I just waited for another bullish candle to be printed. And then I went into the trade. So then what is my stop loss? My stop loss is the previous low, which is this one. Or I could have just used this as the candle up, candle down, candle up, this turning point here. Could have used this also as my stop loss level. So that's how I am going to trade London session going forward. And as you can see, it's a pretty good entry model. You can actually have a look in the past to see where you can get these entry models again. So here, can't really tell you what's happening here. So here, we haven't taken out any high or low from the Asian session. That's why this London session was a little bit difficult to trade. Okay, we turned bullish here. Could have taken a buy when we closed above this fair value gap there. We actually closed below that fair value gap, so to actually I'm looking for a trade inside London session, right? So the only close above that I can see here is this one here. Below these fair value gaps. And then you can take your stop loss to here or here. Yeah, you could have been stopped out. But could it have made a take profit? Yes, it could. It could. But it's up to you where you want to put your stop loss. Usually a normal stop loss would have been the current turning point low. Now, if I put my stop loss here at this candle here, could have actually taken your profit once the Asian high has been taken out. In any case, I'm just giving you an explanation of my new entry model that I'm going to use during the London session. So I'm just waiting for a reaction from that fair value gap and the printing of a bullish candle. In this case, if it's a bullish trade, wait for a printing of a bullish candle once we got our reaction of that fair value gap. And then you just put your stop loss at an appropriate level. So here, I put my stop loss here. You could put your stop loss here. You could put your stop loss here for that matter, but the problem is that it's very big. So yeah. Any case, that's what I'm going to do going forward. In any case, this is a very long video, so I do apologize. But yeah, this is how I traded yesterday, which is absolutely insane. It was just textbook. In my eyes, this was textbook. This is normal structure, normal, plain normal market structure. So is the market dead now while it's the festive season? No, it's not. Yes, there's a few currencies that's in that's on holiday, but is the US on a public holiday? No, it's not. Not right now. This is now the weekend. So what's happening after the weekend? Monday, normal trading day. There's no news, but it's a normal trading day. Tuesday is a normal trading day. The only currency having a public holiday is JPY. Wednesday, 31st. Is it a normal trading day? Yes, it is. 100%. Now, all I need to mention is that there's a lot of other currencies that is going to on holiday. So this day might be a little wonky, but Thursday is a complete public holiday, US public holiday as well as other currencies. So obviously the market is going to be closed on the 1st of Jan. And then Friday, normal trading day. The only bank holidays for the CHF, Swiss franc. So that's it. So next week is literally back to normal. You can wait if you want to. You don't have to trade next week, 100%. But for me, the market is reacting normally. I mean, as you can clearly see, the market reacted of higher time frame confluences, and I made use of those, use of my entry models, and it came out beautifully. So at the end of the day, it all depends on your strategy. That's all I'm saying. So yeah. Any case, thank you so much for watching this, and I really do hope you like and subscribe. I'd really appreciate it. Thank you so much. Until next time. Cheers.